Hi, this is Mike Lembeck with Remax Commercial. Thanks for tuning in to this week's SoCal Multifamily Sales Pulse. This week in what's happening in the market and what it means to you. Apartment sales fall amid rising cost, widening bid-ask spread. Apartment sales fell as the cost of equity and debt financing increased in July, but demand still remains strong in most markets relative to supply. Continued interest rate hikes from the Fed have translated into higher long-term rates and a higher cost of both debt and equity. While these higher rates have cut into investor proceeds, so far many sellers are reluctant to lower prices, causing a sharp drop in sales volume. This week I wanted to go over some of the headlines I've seen recently and elaborate a little bit on each one of them. All right, June average monthly rent for multifamily topped $1,700 for the first time. Yet it is clear that rent growth is starting to moderate. Southern California saw 11 consecutive months of double-digit rent increases, and June's 14% jump in a year was the smallest since the first month of the streak. So we're starting to see the slowdown in the rent increases. I think I saw 20 to 25% rent increases over the last year, and 14% is quite a bit different than that. We have to keep an eye on the market and see if this continues, and if the rent increases or the rents have capped out potentially for this phase of the growth of the market, with the interest rates increasing, inflation increasing, and tenants being able to afford the continuously increasing rents. The second item was a new Redfin report found that 40% of home sellers in Orange County and 30% of home sellers in Los Angeles County dropped their listing asking price in June. We're seeing that translate over into the multifamily market also, where I'm not sure the exact amount because it's not available. That information isn't available yet, but it's quite dramatic. We're seeing a lot of properties come back on the market after being under contract or dropping their asking price. The days on market is continuing to increase, and there also has been fewer sales. So it's definitely, the interest rate increases are definitely affecting this market. We're anticipating a new Fed meeting this Wednesday, and anticipating at least a 0.75% interest rate increase. I'm expecting a full 1% increase on interest rates as of this coming Wednesday, and that's going to have a significant impact or further impact on the real estate market, both buyers and sellers. The next item is Southern California home prices had their first May to June drop in 12 years, and prices dropped 2.9% from May to June. So we are definitely seeing price decreasing, or sellers lowering their price to get the buyer's attention with the increasing inventory. And then the next item is pretty extraordinary. The tanks have been deployed on the streets of China to protect the banks, due to the Henan branch of the Bank of China declaring that people's savings in their branch are now investment products and can't be withdrawn. So that's a pretty significant development. Even though it's in China, the banks typically they're going to draw clues from one another in other countries and maybe make some adjustments themselves. But the one thing that I thought was pretty funny, calling the savings in the branch investment products. That's just kind of a politically correct term for stealing people's savings. Because we've seen a lot of that recently with the homelessness being called urban nomadic lifestyle, and thefts become unpaid purchases. So if you control the language, you control the people. I remember back when I was in grade school, I had a associate or a classmate, and he was stealing things from stores, and I asked him, what's going on here, and he just called it a five-finger discount. So that was how he justified being able to take, steal these items and not feel guilty, I guess. So the next story is the 59% of small retailers are at a risk of shutting down in the fall. There's been several factors, including spiraling inflation, higher interest rates, gas prices, rent hikes, supply chain disruptions, and lower consumer spending and losses left over from the pandemic. So if you've got 59% of small businesses or small retailers who are in danger of going out of business, that's a pretty significant hit to the economy, and a lot of lost jobs at the same time, a lot of lost income for those business owners. So that's something also to keep an eye on, to see if it actually translates into a pretty big hit to the economy and increasing of inflation. And then there was a recent transaction, 62 units in Santa Ana sold for $27 million. This sale was significant because it shows that despite the unsettled debt markets, buyers are still seeking quality buildings in superior submarkets. So what we're seeing there is the investors that do investments in real estate as a business, and that's their livelihood. They don't have another job. They're in professional real estate investors. They're not going to be affected too much by this interest rate increase, pretty much no matter how much it does increase up to a certain point. They're always going to be in the business, and they're always going to be investing. So the bigger properties are going to be still seeing a lot of activity. Okay, for this week's Pulse of the Market, the current market conditions are area specific. Some areas are seeing a lack of sales and others are seeing strong sales. The coastal cities are still strong and typically are during this type of market we are currently experiencing. Some of the inland areas with properties in lower income neighborhoods are seeing longer days on market and either price reductions or properties selling at lower price points than previously. Last week, we saw Los Angeles County have the lowest number of weekly sales in quite some time, and fewer properties selling at or above asking price. What to expect? The Fed are meeting again this week, and we should have an answer by Wednesday on how much the next interest rate increase will be. I'm expecting a full 1-point increase in rates. With the recent market changes and properties taking longer to sell, and with more competition for investor dollars, I expect the RE/MAX commercial auction program to become a lot more beneficial for sellers looking to compete in this market. This is a program that allows sellers to get both local and worldwide exposure of their property, maximize sale proceeds, and do so with little or no fees. Let me know if you'd like more information on this program. Don't forget to look at all the closed sales, weekly stats, and monthly charts in detail in the full report on my website, SoCalMultifamilyBroker.com. As always, feel free to give me a call or send me an email with any questions on the market. Let me know if you'd like to have me analyze your situation and property to help determine your equity position for a potential sale or 1031 exchange. All right, that's it for now. See you next week.